Did you know the maximum you can spend when you're buying a condo is less than what you can spend when you're buying a single family home? On this episode of Bald Prairie Real Estate, we're talking about the top 5 things you need to know when you're buying a condo. Hey everyone, welcome back to another episode of Bald Prairie Real Estate, where I educate you about Canadian real estate. If you're new here, my name is Matthew Pfeiffer. I'm a real estate agent from Regina, Saskatchewan, and I like keeping you up to date on the Canadian housing market, where we do monthly updates each and every single month, making sure we cover your housing market. We do educational videos like this one, talking about something to do with Canadian real estate, buying, selling houses, and everything in between. And on Tuesdays, we got 2 Minute Tuesday, where we talk about one real estate related topic in 2 minutes or less. This episode of Bald Prairie Real Estate, we are talking about the top 5 things you need to know when you're buying a condo. Because the last thing you want is to buy a brand new condo and you can't bring your dog with you. What about if you bought a condo and all of a sudden they keep sending you bills for repairs and you didn't know that they weren't able to pay for those repairs, so you're stuck paying for those costly repairs? That's the last thing you would want. But before we get started, we gotta start this off with another terrible joke. This is from Will. I love viewer jokes, but what lives at the bottom of the ocean and is twitching all the time? A nervous wreck. If you got a terrible joke, put it in the comments below. The first thing you need to know when you're thinking about buying a condo is, what is a condo? Well, that seems self-explanatory. Why am I bringing this up in a top 5 most important things you need to know? And that is because this is something that a lot of people don't quite fully understand. Condominium is a style of ownership, not a style of building. A lot of people, when you tell them you're buying a condo, they're gonna of course think of the high-rise apartments in downtown cities like Toronto, Vancouver, Montreal. And yes, those are condos, but condominiums are a type of ownership, not a style of building. So you can have a condo in all different shapes and sizes. A townhouse, for example, often is a condo. Want to know more about the differences between condos and townhouses? I got a video on that right there. But you can even have single family homes, for example, like individual houses. They could be condominiumized. The entire cul-de-sac or a crescent could have common ownership. Now, common ownership means that you have common ownership over the entire building or area that's condominiumized, and then you have exclusive access to a specific portion of it. So thinking of those high-rise apartments, your specific unit, you've got exclusive access to it, but the entire building you own in common with the rest of the owners. That also means you've got common responsibility for that through your condo fees. We're gonna get to condo fees in just 1 second, but what you need to know when you're buying a condo is that it is a style of ownership, not a type of building. Another big difference between buying a condo and buying a house is what you're qualified to spend. I've had buyers come up to me and say, hey, I've been pre-qualified to spend $300,000. I'd like to buy a condo, so let's set the max budget at $300,000. But that's not going to work because condo fees actually count as part of your debts when you're buying a condo. So when you're qualifying for your mortgage, they're gonna do what's called your debt service ratio. For those that don't know, your debt service ratio is what your cost of living is going to be versus how much you make. And there's a certain percentage of your income that can go to living expenses. So your mortgage payments, your property taxes, and generally your heat are included in what's called your gross debt service ratios. And then you have total debt service ratios. So that's your payments and any outstanding things like student loans or credit card bills that you have to pay. Well, when you're buying a condo, those condo fees get added into your gross debt service ratios. Those can't exceed 38% of your income, and your total debt service ratio can't exceed 44% of your income. So let's go through a quick example. We've got Connie, the condo buyer. She's got a $65,000 a year income, she's got 5% down, and no debts. If she was qualifying to buy a single family home, she'd be able to spend $318,000 today. But if she's buying a condo with $200 a month condo fees, she's now only qualified to spend $300,000. And if you take those condo fees and make them $450, now she's only qualified to spend $278,000. For every $100 in condo fees, it drops your maximum purchase price by about 3%. So when you're looking to buy a condo, make sure that when you do a pre-approval, that the condo fees that you're expected to be on the property are included as part of your qualification, because that's going to dramatically change what you're qualified for. And when you're looking at condos, if you see really high condo fees, that's going to reduce the total maximum purchase price that you can offer the seller. I think everyone hates paying condo fees, and that's understandable. Like we just talked about, it reduces how much you can spend on a condo because it counts on your debt service ratio. As well, it's an additional monthly expense that you are going to have to pay in addition to your mortgage, your property taxes, and everything else that goes along with home ownership. But let's talk about what condo fees cover and some of the advantages of paying those condo fees. Now, every building is going to be different, but usually you're going to see condo fees are going to cover things like exterior repairs and maintenance of the exterior building. You're going to have common insurance, you may have utilities included, and you're going to have a reserve fund. So repairs, maintenance, that type of stuff, lawn care, snow removal, all that stuff, exterior of the building, generally that's all covered by your condo fees. That's the advantage of condo lifestyle. You don't have to deal with any of that. Insurance is another one. When you buy a house, you have to have property insurance that covers the interior, the exterior, all the land, everything. When you have a condo, part of your condo fees go to common insurance for the entire building. So you only have to have insurance that covers your interior contents and liability. It is going to reduce how much your home insurance will cost you. Utilities might be included, depends, every building is different. And the big one is going to be the reserve fund. This is a pool of money that you're putting away each and every single month to future repairs and renovations that are going to be needed on that property. Shingles at some point are going to have to be replaced. Now, as a homeowner, people should be putting away a set amount of money each and every single month for repairs. 1 or 2% is kind of a good rule to work by. But a lot of people don't do that when they own a single family home. And how many times you've heard of a major malfunction in a house like a furnace or a plumbing problem, and now the person's scrambling because they have to come up with $4,000 or $5,000 to fix that and they didn't have any money put away for that. The condo fee reserve fund will cover that. That's what it's there for. So when you're buying a condo, know what the condo fees are and what they cover. That's an important part of buying a condo. A big advantage of buying a condo versus buying a house is the fact that you have somebody that's going to do most of your maintenance and a lot of renovations. You don't have to worry about cutting grass, shoveling snow, replacing shingles, those types of things. That's going to get covered off by somebody else in your condo fees. Pay those condo fees, boom, it's taken care of. But it also does limit some of the flexibility. So for example, you want to change the front door on your condo, you might not be able to do that. That actually might be responsibility of the condo association, and it might be their door even, not yours. You want to do some renovations, move a wall. That also might not be possible without prior approval from the condo board because there could be HVAC systems, wiring, or plumbing for the rest of the units in that wall. So you might not be able to move that. When you buy a condo, make sure that you know what is your responsibility and what is the condo board's responsibility and what approvals you're going to need if you'd like to do any repairs or renovations. If you take one thing away from this video, let it be this, and that is knowing what an estoppel package is. This is an important part of buying a condo. When you're buying a property, generally, you're going to make what's called a conditional offer. So you're saying you buy this property as long as I get my financing and my home inspection is good. When you're buying a condo, there's an additional step because buying a condo isn't just buying a property, you're basically buying into a corporation, and you would want to know what kind of financial shape that corporation is in, and also what are the rules of that corporation. Same thing applies to a condo. So you're going to ask for what's called the estoppel package. This is a big stack of documents that's going to talk about what the bylaws of the condo are, what their budget is, what they're spending money on, what the meeting minutes for the last couple of meetings plus the annual general meeting have talked about, how much money is in that reserve fund, what their insurance policy covers, as well as things like bylaws for pets and what is your responsibility and what is the condo responsibility. You want to know all of that information before making the decision to buy a condo. So get that as part of your offer. Sellers will provide that to you. Then review it yourself and also maybe have somebody like a lawyer look at that, because the last thing you want is that reserve fund is deficient, for example. They have to repair something. When that happens, they don't have enough money in the reserve fund. They divide up the cost of that repair by the number of owners and they hand you a bill. That could be thousands of dollars that you didn't anticipate. So make sure when you buy a condo that that reserve fund is topped up and adequate. Also, if you've got a pet, make sure that pets are allowed or your type of pet is allowed in that condo, because some condominiums have pet restrictions or don't allow pets at all. Knowing and getting this estoppel package, knowing it inside and out, reviewing this is probably the most important thing you need to do when you're buying a condo. There you have it. That's my top 5 things you need to know when you are buying a condo. And if you are buying a condo this year and you would like me to put you in touch with a fantastic real estate agent in your area, got my contact information below. Send me an email and I'll be happy to put you in touch with an awesome agent area that's going to find you that awesome condo. But if you're a first-time homebuyer, you probably got some more first-time homebuyer questions. Well, guess what? I got you covered with my first-time homebuyer playlist, answering all of your first-time homebuyer questions. And 2-Minute Tuesday, where we talk about one real estate related topic in 2 minutes or less, right here is a playlist for 2-Minute Tuesday. As always, guys, thanks very much for watching.